Welcome to Accounting in Focus. In this video, we are going to look at treasury stock. Now, remember that treasury stock is stock that the company repurchases. So why would a company need to repurchase their own stock? Well, sometimes they just want to get shares off the market. Sometimes they have specific uses for those stock, like they might use them for 401k matching or an employee stock purchase plan. So in order for the company to be able to sell shares to their employees, they have to have some on hand. So these transactions are going to deal with the company purchasing and selling treasury stock. So let's see, the company has 10,000 shares of $12 par value common stock issued and outstanding on January 1st. Now, why is it important to know that they have 10,000 shares issued and outstanding? Well, remember, issued shares are shares that are out in the marketplace, and outstanding shares are shares that are owned by the public, not owned by the company. So if there are 10,000 shares issued and outstanding, that tells us that on January 1st, there is no treasury stock. Okay, so on January 1st, no treasury. Okay, so now we know that we're starting with no treasury stock on hand. So when we look at the following transactions, we're starting from a clean slate. So the following transactions related to treasury stock were recorded during the year. The company purchased 1,000 shares of common stock for $15 per share. So if the company is purchasing their own common stock, that means that we are building up treasury stock. Now, so the company, by purchasing 1,000 shares at $15 per share, the company is spending $15,000 of cash. Okay, so we know that cash is one of our accounts, and we know that treasury stock is involved. But now, how do we determine how much of the $15 per share is actually going to go into the treasury stock account? Well, when you buy treasury stock, the amount that the company purchases the stock for becomes the stated value of that treasury stock. If you remember back to the common stock video that we went through, the stated value is what is put into the stock account. So we're going to treat the entire $15 as if that were the stated value of the stock. So now we can do the journal entry. So on 1/15, we've got two accounts. We've got treasury stock and we've got cash. Okay, so we've already said the company's going to pay for 1,000 shares at $15 per share. So I've got a credit to cash of $15,000. My treasury stock, remember we said we're going to treat this as if this were the stated value, so my treasury stock is also 15,000. Okay, so that handles 1/15. So now on 3/20, the company's selling 200 shares that they acquired on January 15th for $15 per share. So if the company is selling the shares, the company is going to receive cash. So we know that that is one of our accounts. They're giving up treasury stock. So if we look at this, I've got cash coming in. Let's figure out the cash first. 200 shares times $15 per share. The company is going to receive $3,000 in cash. And then the value of the treasury stock, remember, if we put it in at $15 per share, we've got to pull it back out at $15 a share. So I think the easiest way to remember that is if you kind of use the inventory theory. Remember with inventory, if we put it in at $15 per share, when we took it out for cost of goods sold, we took it out at $15. So we're going to do the same thing here. If I put it into treasury stock at 15, I'm going to pull it back out of treasury stock at 15. So 200 shares times $15 per share is $3,000. Okay, so that is 320. So now let's look at July 2nd. So on 7/2, the company sold an additional 400 shares for $17 per share. Okay, so we know that cash is involved, and we also know that treasury stock is involved. Okay, so the company is going to sell the shares, 400 shares, for $17 each. So let's figure out the cash amount first. So that would be 400 times $17, which would give me $6,800 in cash that was received. And now the treasury stock. Remember we said when we're dealing with treasury stock, whatever I put it into the account at, I'm going to pull it back out at the same price. So I'm going to take 400 shares times $15 per share because that's what we originally paid for them, and that would be $6,000. Now, this does not balance my journal entry. So I need a credit of $800 to balance this out. Okay, so remember when we sold stock higher than the stated value when we were dealing with common stock and preferred stock? Where did we put the additional amount that was paid over the stated value? We put it into additional paid in capital. We're going to do the same thing here. Additional paid in capital is used when you sell stock for more than the stated value or the par value. So in this case, our stated value is $15 per share. We sold the shares for 17, so that's $2 per share more times 400 shares, which is our $800. So we're going to call this additional paid in capital treasury. Okay, so additional paid in capital treasury, $800. Okay, so now we've got one more left to do, so I'm just going to scroll the screen down just a bit so we have enough space. Okay, so on the last entry is on September 28th. So I've got 9/28. The company sold the remaining 400 shares for $12 per share. So we're now selling the shares for less than we originally paid for them. Okay, so let's take a look at this one. So we know we've got cash coming in, and we know we're going to have treasury stock, so we'll write those two down. Okay, so let's see where this brings us. Helps if I finish writing the whole account. Okay, so let's start with cash. So I've got 400 shares that are selling for $12 per share. So 400 times 12 is $4,800. That's cash coming in. So we're going to debit cash. My treasury stock, remember, I have to put in the stated value. So 400 shares times $15 per share is $6,000. So now I'm off on the debit side. So I say, okay, now what do I do? All right, so the first thing that you're going to do is you're going to see if you have any additional paid in capital that you can tap. Okay, so if you notice in the previous entry on 7/2, we had $800 of additional paid in capital that we created on that sale. So I can use that $800 towards my deficit. Notice this is a credit. I can use $800 as a debit to help me balance my journal entry. That would bring the additional paid in capital for the treasury down to 0. So I'm going to put additional paid in capital for treasury. I'm just going to abbreviate. Additional paid in capital for treasury, 800. Okay, so now I still don't balance though. I'm still $400 off. So I need another account for $400. So I've used up my additional paid in capital for treasury. So now I have to think, okay, where can I go next? So the next step would be to use retained earnings. That's the only other item that I've got in my arsenal that I can use. Okay, so I can't use additional paid in capital for another type of stock, okay, because that additional paid in capital is only related to common stock or to into preferred stock. And in this case, my common stock is really not being affected, right? I'm putting those common shares back onto the market. My shareholder value should not be affected in the common stock area. So really the only thing that I've got left, I'm not paying out a dividend. So really the only option that I have is to use retained earnings. So I'm going to debit retained earnings by $400. Now, if we had done this, let's say that the 7-2 entry and the 928 entry were reversed. Okay. So on 7-2, I had sold the shares for $12 per share. If that's the case, then I wouldn't have had this additional paid in capital. And so if there's no additional paid in capital for treasury stock, then I would put everything into retained earnings. So it's really important that when you're doing a problem like this with treasury stock, that you track if you have any additional paid in capital for treasury. One of the ways you could do that is with a T account, or you could just have something off to the side that says, okay, I've got $800 in the account that I can use up. That's another good way to do it. But I like T accounts because then I kind of visually see the debits and the credits. Okay, if you have any questions on this video, you can leave them in the comments. If you like this video, please like it, share it out with your friends to help them improve their understanding of treasury stock as well. Thanks. Have a great day.